All right, y'all, back to work. Well, we didn't get the exact game plan we talked about last night at 4, so that's how trading goes sometimes. Still a pretty good day today, though, in the morning trade. I hope you guys made some money out there as well. But markets are very volatile right now. We had that strong run up yesterday, that big move, that big pullback this afternoon, and we ended the day today in a sideways trading range. That trading range literally unlocks our entire game plan for tomorrow. We'll talk about why I say that tonight, and I want to go over my favorite entries, my favorite exits, my game plan for tomorrow. That way you have a game plan to make some money as well. So charts are ready. Enough of the intro. It's been a pretty darn good week so far. Let's roll the sleeves up and go find some more winning trades tomorrow. Charts are ready to go tonight. S&P SPY is ready to go. Nasdaq triple Qs are all ready. I have 5 very important clues on these charts in front of us right now that help me put my game plan for together to make money tomorrow morning. One of those 5 clues is right here on these hourly charts. I like to use the hourly charts as an overall directional filter, and right now I'm not quite ready yet to give away control from the buyers. The buyers technically still have all the control of the short-term momentum. Now, we definitely have a lot of uncertainty regarding tariffs right now. But technically speaking right now, the buyers have all that momentum, and that's the most important thing right now. Now, there's one thing on my mind tomorrow that may give the sellers a bit of a chance to take control back, and that is our second clue over on the calendar. Second of 5 clues for tomorrow. We have PPI at 8:30 Eastern time. That definitely is an important news report, but the more important report I'm watching tomorrow, and I believe gives the sellers the potential to take back control of this market again, is that consumer sentiment number, specifically the inflation expectations report or aspect of the report tomorrow. So definitely PPI is important, but I'll be keeping my eyes, and I expect the most amount of volatility tomorrow around that consumer sentiment number at 10 o'clock Eastern time. So keep that on your radar. That is clue number 2. Clue number 3, 4, and 5 are now over on our tick charts. As I always say, we don't trade time charts in our trade room. We always trade tick charts. These tick charts, of course, you can see a 9,000 tick chart there, all the time frames, upper left-hand corner. And if you're here watching for the first time right now, that is the 21 EMA. It's pretty much the only indicator we use to find winning trades each week. There are 3 more clues on this tick chart. Help us wrap this all together right now. First clue is that big move higher that we saw yesterday. Anytime we see a strong move in one direction, we know the buyers are trying to retest that high. That is clue number 3. Clue number 4, though, is that big move down, that strong move down. Anytime we see a strong move lower, we know the bears are going to try to take out that low. And the final clue, and I mentioned this earlier, is that trading range. That trading range is a bullish trading range. What do ranges do? They love to rotate. It's a bullish range, so we look for 2 types of trades. We look for bear traps underneath that low, and we look for breakout pullbacks off of that high. If you put all of these clues together, one of my favorite trades for tomorrow is with that strong run down up into a range. I would love to get one of my favorite trades in our trade room called a double bottom bear trap. Now, to do that, to time that entry, I would love to go run lower, take out that retest, let the bears retest that low, and then look for a bear trap down here. And my definition of a bear trap is, I'm not going to pick a bottom on this. What I'll do is I'll wait for bears to try once, try twice. Once I've got those bears trapped in, then I can squeeze those stops for that rotation back higher. Remember, ranges love to rotate. The amount below, the amount above, that will tell us where that market wants to go. Now, during that rotation, we always try to add to our winners. So as the market rotates off that double bottom bear trap now, we now look to add to our positions. And to do that, it's always a very simple pattern. It's a shallow pullback, a higher high in price, and I'm going to get in just below that low. So I have a number of trades I'm tracking for tomorrow. My favorite trade, though, for tomorrow is let's let those bears take it lower. I believe we're still, for now, still bullish on the hourly time frame. I'm looking for a bear trap and an add-on and a way to complete that rotation going higher. Now, we may not get that bear trap down there. A lot of times what happens is stuff like this, where it bounces hard up off that low. If it bounces hard off that low and starts to grind higher, I always like to look for entries below prior swings. My favorites are to use a channel like this and get in underneath prior swings. Again, the goal will be trap some bears in off that low, use that rotation to rotate higher, use that range to rotate higher. And just like over here, right, it bounces up off that low and you can see what happens, right? Everyone tries getting in as low as they possibly can. That is a favorite trade of mine here for tomorrow. And remember, with all that uncertainty, especially with that consumer confidence number tomorrow morning at 10 o'clock, I wouldn't be surprised if we run lower, get a bear trap down here, jump back higher, hold the underbelly of that trading range, and try to go one more leg going lower. Now remember, with the bulls still in control on the hourly time frame, this is not quite yet a reversal. This is usually another bite at the apple. As the moving average pulls back now, wait for those bears to come out, try once, try twice, we'll squeeze those stops once again, a bear trap into an add-on. And again, my goal is to use this trading range to rotate going higher back up into that range, the amount below, the amount above, running higher up there. One more variation of this, then I want to talk about if we do go higher here, because there are 3 different ways for us to make money if we do go higher here. First things first though, I mentioned earlier, I would love to get that double bottom, trap the bears in and back up again. If I don't, if all I get is a shallow pullback, for example, below that 34 3/4, if we run lower, remember, I don't want to buy too high right now. I have to respect the strength of that move. They're going to try to retest that low. What I'll do is I'll make a small adjustment here for the bear trap. I want to get in underneath that prior swing. Same idea, right? Run lower, trap the bears in, squeeze those stops. Remember, below the low of that range, I can risk small to earn large in that scenario. If all I see is a shallow pullback here, I still want to use the 2-try bear trap technique, 1 try, 2 try. But if I don't get that retest first, I will be looking for ways higher high in price to get in below prior swings, kind of like that one right there, right? Getting in below prior swings. And again, we know where the market wants to go. It wants to retest that high because the buyers have that big move up from yesterday. Now, I want to talk about a breakout pullback because there are 3 different types of breakout pullback techniques we use in our trade room. But before we talk about that though, let's slow down for a second because I know most folks watching right now, you know these patterns already. You're making money with these already. But if you're watching for the first time right now, this might be a brand new strategy for you. Don't you worry though, I teach this entire system in my free trading classes. In fact, I have a ton of examples, bear traps, add-ons. I took a lot more about ranges, how to find them, how to trade them. Guys, I want to help you time better entries with this stuff. What I'll do is I'll put a link up top here for you, upper right-hand corner, hit that link that popped up there and take that free trading course because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there, watch that free trading course. Everyone loves all the trade examples I include in that short video series. The best part is it is 100% free for you. Oh, also too, I'm going to put all the important links you'll need to learn this stuff. I'll put those below the video, the description. Again, start first on the free video classes. Most folks start making money all on their own, all from that free video course. So start there first. And by the way, if you're on Twitter or X, they call it these days, I post a ton of charts and videos and mindset stuff throughout the day on Twitter X. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more, time better entries, hopefully earn a lot more because of it. I'll put those below in the video here, in the description down below. So now you know, if you're new here, where to get more information and actually learn these entries I'm talking about here tonight. Okay, so now we know, strong run down. I would love to get that double bottom bear trap down here, trap those bears in, squeeze those stops, right? And use those pendulum swing techniques as a target going higher. But here's the question though. What if we go higher here right now? I don't want to be too aggressive up here because we know how much uncertainty there is in the markets right now. Let's now go grab the Nasdaq right now. And let's break down some bullish moves going higher here. Boy, I love how in the Nasdaq right now. And again, I know there's a lot of uncertainty right now, but technically, there's no way to make a case right now for the bear side. The bears did a good job at selling high, but there's just no way to make a technical case right now on the short side because even if we do go lower overnight, there'll be trend lines coming in. This is a very difficult spot to be selling down here. So again, I realize a lot of fear in the market right now, a lot of uncertainty regarding the 90-day pause on tariffs, but there's no technical basis right now, charting basis right now to be a bear until we find ourselves up around these big highs up there. Then we can talk about being a bear here once again. So maybe debatable right now, but I'm still leaning on the buy side because there really isn't any way to justify on the sell side. Now, I want to dive into those tick charts here and talk entries. But first though, if you're enjoying this video tonight, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days and I appreciate you guys tuning in and watching my videos. So thank you so much, all the likes, subscribes, and all the ongoing support. Now let's talk Nasdaq. Again, we don't use time charts in our trade room. We always use tick charts. The 5,000 tick chart there on the Nasdaq upper left-hand corner. And the same exact clues here. We have that really big move, strong move higher. We know that strong move is trying to retest that high. Again, strong run down. They're trying to retest that low. But again, the big thing that unlocks the entire game plan for tomorrow is that trading range. Because again, ranges are magnets, right? They're magnets and they love to rotate back and forth. So again, if I make a run lower, again, my favorite trade for tomorrow is I hope they go lower overnight, run this thing lower, get some bears trapped in, and bear trap a double bottom bear trap. If you're with us in our trade room, you know how much I love those retest trades, double tops, double bottoms. Let's now talk about, though, as we go higher here. Because as you can see right now, I've marked up the amount below, the amount above. There may be a lot of bears waiting up overhead. So I don't want to be too aggressive at buying as it goes higher. So here are some things on my mind for tomorrow. Now, first of all, how would I know when a successful breakout happens? There's two things you look for that tell us when we have a successful breakout or when we have rotation expected back and forth. One of them is the pendulum swing. If I can break through that pendulum swing, if I can convincingly break through that symmetrical pendulum swing, that is usually enough to tell me this is a valid breakout. The real secret though is the moving average. If I can get a breakout going higher and I start seeing some separation away from that moving average. Remember, when I say separation, what I mean is the pullbacks, right? The pullbacks are barely missing the moving average, right? Makes sense on that? So if I see it pop up and we see it break through the pendulum swing and the pullbacks are so shallow, they separate away from the moving average, that is my breakout signal. Now, at this point now, we do not want to chase this thing going higher. We know where the market wants to go. There's a few ways in which I will trade this. The first way is if we really see a strong pop and we really see a convincing break through that trading range, and we start seeing separation off that moving average, I will look for small positions getting in underneath these prior swings. Now remember, when ranges break out, they love to break out into measured moves. So one of my favorite trades for tomorrow is if I can see a strong pop up and some separation of that moving average, break the pendulum swing, get separation, I'm going to look for ways to jump in with shallow bear traps below that low. Very important. We know that is our objective. We also know the size of the breakout leg is a measuring leg. That tells us now where that measured move target will be up overhead. That will help us time the exits on that move going higher. Then look left. find those prior highs, and now start watching for a breakout pullback. Now, breakout pullbacks are almost always two-legged pullbacks. One leg, two leg. Think about a measured move. One leg, two leg. My favorites, if you're a student of mine, my favorites are a little bit more than a measured move. Think 120, 138.2, 150%, right? That measured pullback. Ideally, that two-legged pullback will line up somewhere right around that prior high. This is now where we look for a bear trap entry. My favorite way to trade the markets is to trap traders so I can use their stops to fuel that move. We now have that strong run going up. Remember, anytime we see a strong move, it's going to want to take out that high. As we pull back to the moving average, it's bears once. It's bears twice. Remember, it's always a higher high in price because sellers want to sell high. Once those bears are trapped in, I can use that bear trap entry. And as always, add to the winners. I want to set separation off the moving average. It is the same pattern I illustrated right here. It's that higher high in price and move right below that low. This is a classical breakout pullback pattern, right? It's a separation off the moving average. We complete a measured move. Once the measured move hit, we expect to see that pull back, two-legged pullbacks into a bear trap and a retest of that high. That is one easy way to time entries on a breakout pullback. Another very common breakout pullback is a bit more aggressive. If we pop up and start seeing this thing grind, remember, grinding markets are very, very tough to stop. If it pops up and starts grinding like this and really separates off that moving average, again, what I want to do is draw a trend line off those highs, bring that trend line down around those lows. Now, the secret is look left, find some prior swings. What I want that first test off the low of that channel. Now, it could be a bear trap below a prior swing. Those are my favorites. Oftentimes, though, we'll get below that 21 EMA. The bears will come in, try once, try twice, higher high. I can use another version of a bear trap, a two-try failure pattern we teach in our free video classes, and we go higher from there. One cool thing about these pop and grinds is that the pop leg is always the measuring leg, right? Remember, in a range market, the breakout leg is always the measuring leg. So if this is the breakout leg, the pop leg, once I know that, and I know how deep that pullback is, that will now tell me where to leave that final target. Again, the ultimate goal right now is get back up and take out that high, but that will give me more information I need now to know where my targets will be on the exit. Now, one more question here for us. I got two more trades I'm watching for tomorrow. In a moment, I'll talk about how to trade a fake out breakout, going high. That's possible for tomorrow as well. But let's face it, a lot of uncertainty right now. Big news tomorrow. What if we popped up into a new trading range, right? What if we popped up here now into a brand new range? Would that surprise anybody? Wouldn't surprise me. Not on a Friday morning. Big news, a lot of uncertainty. If we popped up into a range, what does that tell us? Now remember, whenever we have a new range, the new range becomes a magnet, right? The previous range is now ripe for, you guessed it, a breakout pullback. These stacked range scenarios, we love these in our trade room. What we do is we use the new range for rotation, right? The new range for rotation and the previous range for a breakout pullback. So in all reality, if we pop higher and go sideways into a range overnight or tomorrow around that news event that comes out, it's not a bad thing. It's actually a good thing because now when I pull back now, I can use the top of that trading range as support, trap those bears in, squeeze their stops, and run back up from there. And again, the amount below, the amount above. I would love to go out, find maybe a channel, right, coming up off that low like that and time that bear trap off of that low. And again, I'm simply drawing the screen right now, but I have a ton of examples of these entry patterns on real charts in our free video classes. So make sure you take that. People love the free video course. So don't be surprised if we pop higher here. Don't be surprised if we go sub in a range here. That is almost better because now remember that new range is a magnet. It anchors that market higher. If we pop higher overnight to a range up here, The bears have a very, very difficult job ahead of them now because, again, it anchors the market higher. And I'll tell you, that would be a beautiful bear trap below that trading range. And again, the goal is slingshot that sucker back up and take it the high out overhead here. Now, the final trade I'm watching for tomorrow is a fake out breakout, right? This one can be challenging. Now, first of all, we know we've got the bulls up there. The bulls are trying to take out this high right now. So as we go higher here, how would I sell something like this? Very carefully, right? Very carefully, because if we go higher right now, it's gonna be very difficult because of that strong move up, very difficult to get enough bears up here until we take out that high. I would imagine, and obviously, again, we got big news tomorrow. There's a lot of things I don't know right now, so bear with me on this here. But my goal is to use a slight variation of a bull trap, which we call a crown reversal. It's very simple. It's bulls trying once, lower low, bulls trying twice, and it needs to be above that high right there, right? Needs to be above that high. Makes sense, right? It's buyers once, buyers twice. I want that bull trap, and I say bull trap because you'll learn this in the free video classes, but that bull trap, strong red candle, closing below that 21 EMA, that would be the signal for that reversal. This is not my favorite trade though, right? Maybe a quarter size trade, half size position on a trade like this one. And not my favorite trade because, again, it's a bull range right now. That'd be a lot of momentum now off that low. That's a tough top to pick. Now, could there be some news that comes out tomorrow? Absolutely, right? So again, bear with me on that. There's a lot of known unknowns right now. But that big move higher up there, it's acting as a bullseye right now for these buyers. What the big thing though is if we do see a bull trap off that high, remember, that's going to want to rotate all the way back down again, other side of that range here. Now, this is where I love this trade down here, right? That is a beautiful trade right there because now running lower, they want to take out that low. This range above us is a magnet. So same thing again, right? Bears once, bears twice, higher high in price, squeeze those stops and trade that rotation going back higher again, right? Makes sense, right? So trap the bears in. I don't need to be that cautious on this trade. I love this trade a lot below that bull range right now because, again, who's going to sell right there? Again, unless we see some big news overnight, but who is taking that short right there? Rookies, right? Rookies. These will not be professionals. Professionals are up here, right? They're selling high right now like professionals do. That's why they are professionals. So I love the fact of that bear trap down here. 1, 2, squeeze stops. And remember, ranges are the most important clue here. Leave that runner, add to your winner. Guys, once I learned this entry pattern right there, once I learned how ranges worked, how rotation worked, how to add to my winners, it completely changed the way I trade. It completely changed, transformed my entire career. So bear trap off the low, trade that rotation back and forth here. Don't be surprised if it goes up, comes crashing back down, bear trap there, take out that low and whoop, right back up in that range overhead. That will be a fantastic trade for us here tomorrow. All right, guys, that's the game plan for tomorrow. And I apologize, my voice is all raspy here right now. Spring is definitely doing springy things right now in Los Angeles. My voice is definitely all raspy. I've had a head cold pretty much the last couple of days here, so bear with me on that one. But that's the game plan for tomorrow. Now, speaking of tomorrow, don't forget, the place to be is in our trade room, 8 o'clock Eastern time, every morning. Guys, the easiest way to make money in these markets is to learn and trade along every morning with us at the opening bell. Again, I'm going to put all the important links you'll need to learn the roadmap. Take that free trading course first. Enjoy all the trade examples I include in that short video course. Then come join us in the morning trade room and we'll do it together. In the meantime, guys, be well out there. Be nice to each other. Make a bunch of money for us tomorrow. And as always, be here next time. Adios, amigos. Bye for now.